All right, everybody. Chad and I are back for another version of Bulls versus Bears. We're talking iron, talking ferrous, steel, whatever the nickname, ISRI term you want to call it. We're really just talking broad market. No real area, no real territory. Specifically other than just kind of broader terms like what does the ferrous market look like this month? So what's going on, Chad? How did Christmas treat you?
Oh, it was excellent, my friend. How about yours?
I can't complain, man. I'm back. I was talking to you earlier. I got a little sick there for a while, which is very rare for me, but I got pneumonia, so I took a couple of slower days, and I'm back in the saddle and ready to fight for the bull case for this scrap market.
I love it. I mean, I got my red on. I'm like Tiger Woods. I think there's gonna be a lot of blood in the water this month.
So I hear, man. So I hear. Well, walk me through it, man. Tell me why everybody should be so scared of January.
Well, I feel like we got to start with the Bulls because I'm a gentleman. I'll let you go first, but I do feel like there is a couple of charts on here that I did that I feel like talk about the bull case. So the first one is there's always an additive about oil prices in conjunction with scrap prices. So here we got crude oil. It jumped from 65 to 76 bucks a barrel. What are your thoughts on that?
I feel like oil has got some room to run. It was up obviously today, which we're a little bit late for our Bulls versus Bears case. I mean, this chart a couple of days ago might have looked a little bit rougher, which might have made the bear case a little bit stronger. But to start the week, this week to start the month, generally speaking, I feel like there is room on the oil side just because it's kind of we're in a cooling period, which I know is a different oil, but I feel like if travel begins to pick up when this weather kind of goes away and they keep shutting down all these oil wells, I feel like there's going to be some room to run for crude.
Yeah, I think that's good. It's good to keep a lot of different commodities in perspective because if you just focus on one, you can feel like you're flying high or want to jump out of the building depending which way it's going, right?
Correct. Yeah.
So what about iron ore? I mean, I feel like that jumped from I want to say around $93 to $112. It might be a little higher or lower today. I don't know, but
yeah,
I feel like that's a good indication, good sign.
That's a little uglier. That's a little uglier for the bull case. As far as an overall picture, yeah. But the last little run, gives me some hope that, I do feel, and we've had this conversation in previous podcasts, that iron ore, I think, used to be a really strong reflection of, the ferrous market, where as more blast furnaces go away and the mini mills kind of come to fruition, it may not be as strong as an indicator.
And then when they're always in the adjective, you can take like iron ore times 3 or 4, and that's going to be the future scrap price. Or there was always something like that out there. Right? But it's funny. All right, you ready to talk about some bearish news, or do you got any other bullish news?
Let's hear it, man. I mean, whether I agree or not doesn't matter, but I want to hear your case.
Well, all right, so I feel like pig iron, right? I feel like hot roll, as we talked about last Bulls versus Bears. Finished steel can drop, can do whatever. There's plenty of margin there. But if substitutes start dropping, then that's going to give the AFs leverage to push down prime scrap, right? And so we did see this jump. I have it dropping from like 568-ish to 548. So I mean that's a drop, right? And so I feel like and more importantly, it gives the big bad steel mills the leverage, right? What are your thoughts there?
I think there's some validity to that, but I also feel, it just depends on, obviously we're speaking on as an overall perspective, depends on the furnace, depends on the steel mill, what their demand, what their demand is on pig versus say HMS.
All right. Well, this big bear, I feel like mills have adjusted away from prime scrap as just due to its being tightness in the automotive market. So I think this is a bigger indicator today than it has historically been from.
So on that note, Chad, what is your opinion if the automotive really does pick up, like, they're really anticipating, I feel like even if it's second quarter 22 and into the finish of the year, what is that going to do to this market if these automotive companies are able to really consume as much steel as I feel like there's demand for new vehicles out there? Where do you anticipate this going?
Well, I think it's like chicken versus the egg, right?
Yeah.
If you have more auto production, you should have more steel demand, right? Well, you should also have more scrap. So both are true. Now, which one comes first, and what does that mean on scrap pricing? I think, how much is the automotive sector steel demand, and then I think what you really got to talk about, and what we'll get to is imports, right?
Yeah.
So
I'll concede this point though to you that this one doesn't help my cause.
Yeah, so I feel like so if we look at talk about steel demand, so I mean if you look at imports, I mean that line's moving the wrong direction, for a bull. And I think you're seeing those lead times. We can talk about that. What is it on? See if I can find that slide here.
How much of that, while you're looking for the slide, how much of that has to do with the strength of the dollar, in your opinion, Chad? I mean, as of lately, the dollar has really screamed, which is screamed higher, at least it felt like here recently. And I think that's kind of put some pressure on, on that import market. I mean, pressure in a good way as far as being able to drag more imports in at a better price.
Yeah, I would say I used to think I could understand currencies and how things work, and then I YouTubed. It's a economist. It's called the milkshake theory. Yeah,
I think you sent it to me a while back.
Okay, it's great, and so it basically reversed my thinking always. So it feels like there's we print all this money, our dollar should be getting weaker. Well, so did everybody else, and so it's really about the big picture, and I'm just focused on little ferrous scrap, I can lose sight. So I really can't give a good insight as others, that's for sure. But here's that chart, the steel lead time. So if you look at the gray one there, the lowest one, that's the imports lead times. And so when you're around 3 weeks lead time, that's going to push this market down in any market, right? And so I feel like we've been seeing this fall for the last couple, as you can see, for the last couple, maybe 60 days or so. Mm-hmm. And it was one of the things I was definitely keeping an eye on, because I feel like, that's scary. And then in hot roll, you can see, and this is the futures market, but you can see that they're not going higher, so it feels like that's not gonna help. And the actual hot roll chart, this is an ugly one.
Yeah. Well, and I pay attention to these two just for our pipe company, even though it's mostly cold roll material, but they kind of, for the most part, run in tandem within a few bucks. Yeah. So this is definitely a chart that I watch. Lead times, and this material, just because I'm always curious, like what the price of our steel pipe should be doing. And it's that chart. I mean, at the end of the day, there's enough margin in that, built into that deal. We've discussed in the past that I feel like it's going to come down to not to dodge that slide, because that's an ugly slide, but it's going to still come down to availability of scrap, and if the mills are willingness or lack of willingness to give up margin on the way down. So that's that. Thanks for the ugly charts. Thanks for presenting your bearish case, my friend.
Yeah, let's keep it going with the ugly chart. So I feel like this is the biggest one. This is really the meat, right?
Yeah.
We're thinking about January market. What's export doing? And so Turkey had a lot of big changes with their currency, which you alluded to earlier, right? And so we've seen a swift downward movement over the last 60 days here. Liquidity seems to be going away in the export market because of this trend. What are your thoughts here?
I'm looking for this movement to this right here. That's my hope. You see where my this is where this is going. that among October. That's what I'm hoping for. I'm hoping that we get that kind of steady move down. It doesn't last as long. And we get that ramp back up. But yeah, the slide is on. It's just a matter of at what point does it hit the brakes and trend upwards? And really that's going to be just a matter of is there going to be enough demand for new steel to stop that, especially on the rebar end over in Turkey.
Yeah. All right. So, I mean, I feel like you got to think about shred feed pricing, because whether it's, I mean, when we see these bottoms, it feels like the really what can stop it is the guys that feed the shredders just say no more, right?
Yeah.
And so historically, I think we're at pretty high pricing on shred feed. What are your thoughts there? Do you feel like?
I feel like it's shredder feed pricing, if you compare it to new steel, is still at a discount, right? But shredder feed, today, I think what's buoying that market and what will continue to buoy it is gonna be the non-ferrous that's coming out of the shred feed. So I was talking to somebody the other day, Wednesday. So I was talking to them on Monday, and they were saying, on the shred feed side, obviously the ferrous is the main driver, but what can kind of keep that thing floating maybe a little higher than they would like to see it is if the Zorba pricing strong, the Twitch, the Zurich, depends on, what they're running, but obviously the shredder is going to want to try and keep as much margin as they can as well. But I do feel like if the base metals, the base non-ferrous metals stay strong, that's going to help mitigate some of that drop, in my opinion.
But I guess my thoughts are, I feel like shredders have it the toughest in the business, because when the market's going up, guys don't ship. When the market's going down, guys overship, right? And they can't really control a lot of that at times. I mean, to a certain degree, they can control it. But so I feel like if I'm a shredder day, like I'm cutting my price hard and fast because I want to control my inbound before this market. I don't want to wake up in this market, 60 days from now, be worse. And all of a sudden I'm like, oh man, I got some expensive inventory. So you feel like they'll do that? Or do you think they'll be like, you know what, there's some good non-ferrous pricing out there. Let's just get in as much as we can because we can make a buck somewhere else. I
think it kind of depends on their inventory position right now, but I also think it depends on logistics, because one of the things that it's not just our industry, but every industry out there that is very dependent on transportation and logistics, especially on full truckload quantity basis. I think your LTL stuff, some of that stuff that can be hauled by a van or a pickup truck is a little bit different. But anything that's semi-truck, full truckload quantities material, everybody and their dog that I talk to is, they're having a tough time logistically. Now, if you're rail served, you think you're in a little better position because the rail seems to be has worked through some of their inefficiencies and has been able to has actually made a little bit of more of a positive on the transportation side. But the trucking, anybody that's not rail served, which is how most of your shredders are getting fed, right? Most shredder yards are getting fed by trucks.
Yeah.
Just because it doesn't make sense for most of the time to be stuffing tin bales, car bodies, whatever else in a gondola. So shredders, that's like an interesting dynamic. I mean, I agree with you that if I owned a shredder, I'd probably be trying to get ahead of it, basically just to kind of hedge my bet a little bit, because then I can always turn the price back up tomorrow. Where I think a steel mill, they turn down slower, but then they turn up slower as well. So they try to take the peaks and valleys out of it a little bit more. Versus shredders, it's just boom, 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 and they have the ability to adjust to, tomorrow. Be like, all right, they can shut the flow down or kick it up. But what the killer right now is freight and who can actually move the materials. Like, take weather out of it, which just adds a whole nother issue. But if you take weather out of it, just even the trucking component and moving your material is going to be tough this month.
I mean, you're a bull. You got to bring it up. We're only one bad storm from an up market, right?
I know, man. I'm trying to stoke it as hard as I can, but I feel like this month I might be fighting a losing battle. You know, and I'm hearing people calling me and saying, "Hey, what do you think? It feels pretty weak out there." I'm like, no, it feels pretty strong. I don't know what you're talking about, you know?
I mean, I feel like I heard a lot of chatter about the first quarter, and it's going to be just crazy hot because we've got all these new mills coming on capacity, more scrap demand.
Yeah.
I think scrap market's hot now. You know, I was buying into it, but I mean, what a surprise.
You know what I tell if I learned anything about 2020 and 2021, that good old saying of buy the rumor, sell the news type of deal. It feels like that's what this is, right? Like the people buy the rumor, sell the news, but the reality of it is maybe that flip side will be true, is that maybe we start the year weak because nobody really knows going into a midterm election year, and there being a lot of chatter about what the Omicron, COVID virus or this or that, and then maybe if we can just get this weather and some stuff to chill out a little bit, we might this thing might gain some steam.
I like it. Hey, that's what a bull has to do, right?
I mean, if you're a business owner, man, you got to be optimistic to a certain extent, or else you start reading the news, you'd be depressed.
Well, isn't that the truth? Man, this was awesome. Is there any other thoughts you got cooking?
I think you kind of nailed it. I think as much as I'd love to tell you that I think I got the upper hand, I think I'd be lying on this one.
There's a little bit more, a few more negative charts and positive ones. We'll see about that.
Yeah. Well, either way, man, we'll keep it moving. We'll see everybody next month. And anybody that's got any comments or charts you'd like to see Chad pull, on the next go check out his website, and he'll post a link in the comments to the podcast, and go check it out. And it's worth a look.
Thanks for your time, Brent.
All right, man. Take care.
All right. See ya.
Yeah.